Good morning, everyone, and welcome to Monday Morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, stock index futures are down across the board, being led lower by the Nasdaq. Commodities are mixed with crude oil up another 2%, while gold is down in the pre-market. And then we've got Bitcoin sliding another $3,000 in the pre-market on Monday morning. Now, we don't have any major economic numbers coming out on Monday, but on Tuesday, we've got PPI. On Wednesday, we've got CPI. And on Thursday, we have not only initial jobless claims, but U.S. retail sales. So these numbers can certainly add to the market volatility this week. And they can also be a catalyst to dramatically change the direction of the market. We will just have to wait and see, but I'm expecting a lot of volatility this week. Now, fear is rising, and of course, if the VIX is moving up, we expect stocks to move down. Now, we have a new buy signal for the VIX for the S&P 500 and for the NASDAQ 100. These buy signals are coming from an elevated level, so the market was already spooked before the trend started to move up. And now we've got the VIX ETFs also back on buy signals as of Friday's close. Looking at the bond market, bonds continue to move lower on Friday, putting upward pressure on bond yields. There's the TLT making a new low. The XBB gapped lower on Friday, so heading towards the bottom of that open gap from back in November. Then we had emerging market bonds make a new low, and then we have junk bonds rolling over. Junk bonds are like technology stocks, they're the risk on trade. And we certainly had some risk on activity as we did in the NASDAQ and the TSX last week. But here we are rolling over on Friday. So this is now the risk off trade, and that's probably not a good sign for the stock market. Looking at the major index ETFs, starting with the Dow, making a new low for this move on Friday. We've been on a sell signal since early December. Similar situation for the S&P 500. There's the equal weighted S&P 500. Also, we've been on a sell signal since early December, making a new low on Friday, and we're back at levels we haven't seen since September. There's the NASDAQ. Now, the NASDAQ had a fake out last Monday. We popped on Tuesday, complete reversal, and here we are on a sell signal, making a new low for this move. So that's a series of lower highs and now lower lows. So that's a bearish sign for the NASDAQ going forward. Now, the Russell 2000 made a new low on Friday, trying to hold 215. We were trading sideways for a few weeks, and a lot of people were looking at this saying, hey, there's the Russell making a base. And so if we started to break out above 225, that would have been bullish for the market. But here we are starting to break down below 218.75. That is bearish. If we look down, we're only a couple of lines away from the $200 level, and that could certainly be a target to the downside. If we just look at the distance that we've moved since late November when the Russell peaked, $200 would not be an unreasonable move to the downside from where we are right now. Now, the Canadian market popped last week with the NASDAQ, and unfortunately, the iShares for the TSX 60 and the Vanguard Canada ETF are both back on sell signals as of Friday's close. Now, I'm watching financial stocks on both sides of the border. In Canada, the financials are holding up a little better than in the U.S. We still haven't broken down below the December low for the Canadian financial sector, while the U.S. financial sector broke through the December lows on Friday. And here we are trying to fill an open gap from back in early November. Then looking at the U.S. banks, they've broken down, they've filled that gap and have continued to move lower here. So we may be heading back down to the October lows. Unfortunately, insurance companies are having a hard time right now, and we know what's going on in Southern California, and that is going to have a dramatic effect on some individual insurance companies. And here we are making a new low. Now, at some point, those houses are going to have to be replaced, and companies like Home Depot may be able to profit from that. And you can see Home Depot moved up on Friday against the rest of the market. I'm not sure exactly when is going to be a good time to jump in. All the residential construction companies are being sold off right now, and a lot of them look like this. Here's Beazer and making a new low on Friday with the market. So There is going to be an opportunity to rebuild Southern California. I don't know when it's going to start, and I don't know when it's going to be the right time to get into those stocks. There is certainly no indication that anybody should be doing that on Monday morning. Looking at the Magnificent Seven stocks, and of course, we've added a couple to it, but here we are. The ETF popped last Monday and then completely rolled over. We're back on a sell signal here as of Friday's close. You can see Apple has continued to move lower sharply on Friday. We're trying to hold 234.38. If that breaks, then 226.56 would be our next target to the downside. Amazon's back on a sell signal. And we've got Broadcom back on a sell signal. Still waiting for Alphabet. We would need a close on Monday below $192.27. For Meta, we would need a close below $597.19 on Monday. What's not holding up is Microsoft, but Microsoft has held the low from the previous week there, and we're looking to see if that breaks down on Monday. I'm pretty sure it will. We're trying to hold the 200-day moving average. We closed right on it on Friday, but I think that's going to be blown away on Monday. And there's NVIDIA back on a sell signal as of Friday's close. It wasn't too long ago we got to lock in some profits up at the 150 level, but those times have gone. Now, Shopify's back on a sell signal here in the U.S. We're trying to hold $100. If that breaks, then 87.50 would be our next mathematical target. But then we've got an open gap over here that could act as not only a target, but an area of support. We'll just have to wait and see. What we do know is we're on a sell signal right now on both sides of the border. On the TSX listing, we're stuck at the 150 level right now. We closed at 149.72. And so we have this area of support, which is currently holding. If that breaks, then the bottom of the open gap may be a target, and that is just above the 125 level. Then looking at Tesla, looking up on Monday, we need a close above $422.19 to give us a buy signal. At the same time, if we start breaking down below 375, 312.50 is our next mathematical target for Tesla. Let's finish off this morning's presentation, taking a look at commodity ETFs. And we had copper move up last week, and unfortunately, copper stocks are not going with it. We're on a buy signal right now, but apparently nobody wants copper stocks, even with the price of copper moving up. Now, gold moved up last week. It's down in the pre-market this morning. Gold stocks had a reversal on Friday after hitting a new high for this particular move on both sides of the border. And so we're not expecting any fall through to the upside on Monday. Looking at the price of silver, we're on a buy signal right now, but silver miners are not on buy signal, so no interest in silver miners at the moment. Then looking at crude oil continues to move higher on Monday morning, which is going to put upward pressure on gasoline prices. And if you look at the price of gasoline, we're currently trying to poke through those highs from back in early October. And we should certainly be able to do that on a closing basis on Monday. Natural gas popped on Friday, still trying to take out the high from the previous week. And then looking at energy stocks had a reversal day on Friday, but did not close lower on the day. There's your big move up to the 1836 level, and then we closed down. We certainly closed higher than we opened, so we do get a bearish reversal signal, but it is not that negative. It would have been more negative if we closed below where we opened. It certainly would have been much more negative if we had a close below the previous day's low. And we had similar market action in the U.S. market. We tried to get to 90.63. We got as high as 90.20 on Friday. So unfortunately, we did not hit our next mathematical price target. Now, with crude oil trading higher this morning, we may actually get another chance to hit that price target on Monday. Okay, folks, that is all for this morning's presentation. So far, we have stock index futures trading lower, while commodities are mixed. We've got gold down $30, while crude oil is up at $2 in the pre-market at this time. Have a great day. Next time you'll hear my voice is on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.